Welcome back, everyone. Ready to dive into some earnings reports. Today, we're looking at Supermicro.
All right, let's get into it.
So for anyone who may not be familiar, they're a big player in high-performance computing, especially in the AI world.
Yeah, they've really carved out a niche for themselves in AI infrastructure.
And their recent earnings report. It's got everyone talking.
They're seeing some serious growth. It's pretty impressive.
Yeah, they've actually bumped up their revenue forecast for the whole fiscal year.
To a range of what, $23.5 to $25 billion?
Exactly, and that's largely thanks to the huge demand for their AI-focused servers.
And you know what's interesting is that it's not just about riding the general AI wave. Supermicro is in a good spot to take advantage of the very specific needs of different AI applications.
So they're not just like throwing more powerful hardware at the problem, it's more nuanced than that.
Way more. They're designing and building servers that are optimized for, the unique demands of AI workloads.
So it's not just about having the most powerful servers, it's about having the right servers for the job.
Exactly. Their real strength is in tailoring solutions for demanding tasks like, data analytics or large language models.
Or even generative AI.
Right, exactly. And all while building these really strong relationships with the big GPU vendors like NVIDIA, AMD, and Intel.
So they can keep integrating the latest and greatest tech.
Exactly. Super agile.
Okay, so they're smart about their hardware, they're partnering with the big players, and they can keep up with AI development.
Sounds like a recipe for success.
But let's get into the details of their recent performance, shall we?
Let's do it.
Their preliminary numbers for Q2 of fiscal year 2025 are out, and, well, they paint quite a picture.
Yeah, a very positive picture.
They're expecting net sales between $5.6 billion to $5.7 billion.
Which is, let me tell you, a massive 54% growth year over year.
What?
And then on the profitability side, their non-GAAP diluted net income per share is projected to be between $0.58 to $0.60.
Okay, so that's a 5% increase compared to the same period last year.
Exactly. Solid growth all around.
Those are some very impressive figures. But I'm curious, beyond just the raw numbers, what is driving this remarkable growth? Like, what is their secret sauce?
Well, it's a few things. First, they really understand the AI landscape. It allows them to create highly customized solutions.
So they're not just selling a one-size-fits-all product.
Nope. They're tailoring their servers to a wide range of customers.
From small businesses all the way up to massive data centers.
It's really quite impressive, the range they cover.
So kind of like how this deep dive is tailored just for you. We give you the insights you need without overwhelming you with every little detail.
Aha, exactly.
But instead of information, Supermicro is giving you the perfect server setup, no matter what your AI goals are.
That's a great way to put it.
And the second part, their secret sauce.
Oh, right. Their close relationships with key vendors, especially NVIDIA, that gives them a huge edge in securing those in-demand GPUs.
Right. Those things are like gold dust in the AI world these days.
Absolutely. And Supermicro's partnerships make sure they have a steady supply of these essential components.
So they've got a VIP pass to the hottest show in town, basically.
It's a big advantage in this market.
It has to be. It allows them to meet that crazy demand for AI-powered servers.
And stay ahead of the curve, for sure.
Now, they're definitely on a roll right now, but I get the sense they're not naive about the challenges ahead.
Oh, definitely not.
I mean, can they really keep up this incredible growth? Are there any potential bumps in the road?
That's the million-dollar question, isn't it? And it's important to remember that, even with all this momentum, there are risks. There are challenges.
So what are the biggest ones?
Well, I think the biggest one is their dependence on the growth of the AI market. If that growth slows down or if there's some big tech shift, Supermicro could be in trouble.
So they're kind of like a surfer riding a massive wave. They need that wave to keep going to stay on top.
That's a great analogy.
And the waves in tech. Unpredictable.
Very much so. Another challenge is the competition. It's only getting fiercer.
Oh, yeah. You got Dell, HPE, Lenovo, all fighting for their piece of the AI pie.
And even the cloud providers are getting in on the action now.
So Supermicro's in a shark tank, basically, swimming with some big predators.
Exactly. And you know what happens when sharks start feeding?
Pressure on everyone else.
Exactly. Pressure on prices, pressure on profits.
And then there's the always fun supply chain issues.
Oh, right. Any disruption in the supply of, those crucial components like GPUs or memory or networking gear, that could really hurt them.
It's not just about the GPUs, it's about the entire ecosystem that makes those servers run, right?
Absolutely. It's a delicate balance.
And then there's, the elephant in the room. Geopolitical tensions?
Especially those related to China. Those global events can have a ripple effect no matter how well a company's doing.
So Supermicro is basically navigating a maze with moving walls.
It's a tough landscape.
They've got this momentum, but these challenges are very real. So how are they addressing these potential roadblocks? How are they navigating this crazy terrain?
Well, to answer that, we need to look at the Q&A portion of their earnings call. That's where things get really interesting.
Because it gives us a glimpse into management's thinking.
Exactly. Their plans, their strategies.
Let's see what they had to say.
All right, let's dive in. One thing that really stood out in the Q&A was the focus on GPUs.
Oh, I bet. Everyone wants to know how Supermicro is getting their hands on those things.
Right. Especially those high-demand H100 and H200 chips from NVIDIA. Analysts were all over it.
Yeah, those are like the platinum tickets of the AI world right now.
Totally. And, management actually seemed pretty confident about it. They kept emphasizing that close relationship with NVIDIA.
Saying they're working together, really closely to secure those allocations.
Exactly. To meet that demand. They even hinted at some new stuff coming down the pipeline in their partnership.
Ooh, juicy.
Yeah, definitely something to keep an eye on. It really does seem like these strong partnerships are like their secret weapon.
It gives them access that other companies just might not have. Like they've got that backstage pass.
Haha, that's a good way to put it.
But okay, let's say they get the GPUs. What about the technical challenges? I mean, all that AI power generates a lot of heat.
Oh, for sure. And that brings us to liquid cooling.
Ah, yes. Keeping those servers cool under pressure.
That was a hot topic, no pun intended. Haha.
Okay, maybe a little intended.
Analysts wanted to know, how much of Supermicro's revenue is coming from those liquid cooling solutions.
And what their potential for future growth is.
Right. They see it as like a key differentiator in the market and management. Super enthusiastic about it.
I bet. As AI workloads get more intense, keeping those servers from melting down is only going to get more important.
Yeah, exactly. They were talking about how a lot of their big Tier 1 customers are already adopting these liquid cooling solutions.
And that they expect that segment to really drive revenue going forward?
Mm-hmm. They were basically saying that their advancements in liquid cooling are giving them a leg up on the competition.
Because they can pack more power into their servers, but they're still running efficiently.
Right. More bang for your buck, basically.
Okay, so they're killing it with the hardware, but what about the financials? All this investment in competition has to be putting some pressure on their margins, right?
Oh, yeah. Analysts were definitely asking about that. Like, how are they going to maintain profitability with everything going on?
It sounds like a tough balancing act.
It is. Management acknowledged that, there are going to be ongoing investments.
Which means operating expenses are going to go up.
Exactly. And that could squeeze margins a bit. But they also said they expect to see some improvement in gross margins.
Because of their supply chain, right? And their scale.
Yeah, they're hoping to leverage those to their advantage.
So it's a bit of a tightrope walk, but it sounds like they have a plan.
They do. Now, another big thing that came up was, geopolitics.
Ah, yes, the fun part.
Analysts wanted to know about the whole China situation and how Supermicro is planning to deal with any potential risks.
I mean, those global tensions can throw a wrench in the best laid plans.
No kidding. And while management was, pretty careful about what they said, they did highlight their plans to expand manufacturing in the U.S.
Ah, so diversifying their supply chain.
Exactly. Not putting all their eggs in one basket.
Makes sense. Gives them more flexibility if things get messy.
For sure. Now, shifting gears a little bit, there are a lot of questions about capacity.
Oh, yeah. With demand so high, I bet they're getting slammed with orders.
They are. Analysts wanted to know about lead times, how they're managing production, all of that.
Because when everyone wants your product, it could be tough to keep up.
Right. And management admitted that capacity is a challenge right now, but they sounded optimistic.
About being able to, scale up production and shorten those lead times.
Mm-hmm. They talked about investing in new facilities, streamlining their processes.
Working closely with suppliers, all that good stuff.
Yep. They're pulling out all the stops to meet that demand.
So it sounds like they're firing on all cylinders right now. But it's not just about churning out servers, is it?
Definitely not. They're thinking about the bigger picture.
The future of AI, their place in it.
Exactly. And that's where things get really interesting. One thing that really stood out was how much they talked about their ecosystem.
Yeah, they kept mentioning building a stronger ecosystem around their products.
Right, like collaborating with more partners, developing more solutions.
Almost creating a one-stop shop for AI.
Exactly. And I think that was a really important takeaway from the Q&A.
That they don't want to just be a hardware vendor.
Right. They want to be a complete AI solutions provider.
So not just servers, but software, consulting, support services, the whole shebang.
Exactly. It's about capturing more value in the AI market and building deeper relationships with customers.
So the hardware is just the starting point. It's about the whole ecosystem that supports AI development.
That's the idea. They get that AI isn't just about the tech, It's about how you apply it, the workflows, the expertise. It's a whole thing.
And they highlighted this partnership with DeepSeek, a company that develops these really cutting-edge AI models.
Oh, yeah, that was interesting. What'd you make of that partnership?
I thought it was a smart move. It shows they're not just focused on maximizing GPU usage.
Right. Some of their solutions might not even rely that heavily on GPUs.
So it's not just about raw power. It's about, finesse. adaptability,
And catering to different types of customers.
like those who might be more focused on cost effectiveness or energy efficiency.
Exactly. DeepSeek is a good example of how they can do that.
As the AI market keeps changing, that flexibility is going to be key.
Absolutely. But of course, no company is without its risks. And one thing analysts are definitely watching is their reliance on NVIDIA.
Yeah, that close partnership is great for getting GPUs, but it does make them a little vulnerable.
Right, like what happens if something happens to NVIDIA?
What if the supply of GPUs gets even tighter?
Analysts were grilling management about that. Like, how are you going to handle that risk?
So how did they respond?
They admitted it's a risk, but they emphasized that they're always looking at their supply chain.
Exploring other partnerships.
Yeah, potentially with other GPU vendors.
And I guess their investments in software and optimization also help.
Exactly. It's about reducing their dependence on any one piece of hardware.
So they're trying to have their cake and eat it too. Strong partnership with NVIDIA, but with some backup options.
Exactly. You got to be flexible in this market.
Well, this has been a fascinating deep dive. We've covered so much. Their financials, their strategy, the challenges they face.
Yeah, Supermicro is a company on the move. They're right at the forefront of this AI revolution.
They're definitely playing to win, but as we've seen, there are still a lot of unknowns. The competition is fierce.